there's a big uncertainty, isn't there? There's a big mystery why this has taken place, the trigger. What are you hearing?
Well, everybody's scratching their heads a bit, Mark, and they're not really sure what's driving this. But I think the sort of the widespread belief amongst traders of the short end euro curve is that this is something idiosyncratic, it's something temporary, and that over the coming days we should see a normalization of the Eonia rate. Because in the whole ECB QE era, we haven't really seen these types of spikes. We saw them before the ECB went negative on rates and introduced QE, especially around month-end periods and quarter-end periods. But we haven't seen that for quite some time. So that's what I think is causing the consternation amongst market participants. But there is a belief that it is something idiosyncratic. It's a one-time shock, and that we should be back to normal sometime. If not on the fixing today, then sometime next week.
Richard, what if it doesn't normalize?
Well, that's the big thing, Vonnie. If it doesn't normalize, and this is something sort of where we have a broader read across, it's not something short term, then I think it has the scope to really shake up the short end of the euro interest rate curve, and we could see a lot of positioning shift. We could see yields move higher. And I think one of the things that could another market that could be impacted is that it could provide support for the euro currency, because those short-dated interest rate differentials will move in favor of the euro over the dollar and other currencies.